really strong run for the industrial market. We'll talk about some of the trends that have led to that growth throughout the country and here in southeastern Wisconsin. There's some threats to that trend as we go into 2023, so we'll talk about that and see if industrial is perhaps headed for a cool down this year. So the driver of the growth of industrial real estate centers around e-commerce. E-commerce was already growing along with the real estate market, and then the pandemic happened. In 2020, at the start of the year, e-commerce made up about 12% of retail sales nationwide. During the pandemic, that spiked up to 16%. Of course, people are starting to return to brick and mortar retail, so that tailed off a little bit, but it's still sitting at 15% of retail sales coming from e-commerce. There's plenty of room for growth in that number, and it's warehousing to keep up with e-commerce that has accelerated the growth of the industrial market over the last few years. And here's how it's impacted things locally. If you look at the graph, there's a huge green bar in the middle of the screen. I'll draw your attention to that. That was our new deliveries in 2022. 11.4 million square feet of new construction was delivered in our market. That's just a staggering number. And you can see how the year-over-year deliveries are driving the absorption, which that chart is on the left side of the screen. That's been going up every year, and absorption was 7.8 million square feet in 2022, and there's still plenty of fuel left in the tank. Under construction at the end of 2022, we still had 7.9 million square feet under construction in our market. That is the vacancy rate, and it's remained very low for industrial. For the last 7 quarters now, it's been somewhere between 3 and 3.6% on the vacancy rate. And for owners, that's been great news. Their lease rates have gone up. Part of that is due to the high demand and low supply of space. Also, new deliveries fuel higher lease rates because there's a higher price tag attached to the new deliveries. But for the last couple of years, lease rates were sitting around $550, $560 a square foot on average asking rate. Last year, we went over $6 a square foot. Right now, the average asking lease rate in our market is $6.17 per square foot. So a lot of growth. Where is it happening? You may have guessed it starts with the I-94 corridor. Haribo finished phase 1 of their Pleasant Prairie manufacturing facility. It's the first North American manufacturing facility for the German gummy bear maker. They purchased 137 acres of land 5 years ago, so this has been a long project in the making. They had several delays, but they finished off phase 1, and there will be more to come there for Haribo. And then some of the typical players, Amazon leased another 1 million square feet in Kenosha. That was a new delivery in 2022. We'll talk about Amazon a little bit more coming up later. And then Uline, their growth has been tremendous. They are now, by my unofficial count, at 8.5 million square feet of space between Kenosha and Pleasant Prairie, and that includes a new 1 million square foot delivery that they just leased near their Pleasant Prairie facility last year. When we look at the large sales, those are also concentrated along the I-94 corridor, again, close to the state line. EQT Exeter acquired properties that were located in the Lakeview Corporate Park in Pleasant Prairie from CenterPoint. So that included 8 industrial buildings and also 103 acres for future development. Opus Development was working on a spec building in Kenosha, and as they were wrapping up construction in a 280,000 square foot building, an Illinois investor purchased it for $100 a square foot. We assume they had a tenant in hand, but no tenant announcement has been made there yet. Now, if we come up closer to downtown, this was a really interesting deal with Gannett selling the Journal Sentinel printing facility in West Milwaukee. That one sold for $56 a square foot. It's a 465,000 square foot building, and it's now available for lease, which is a central location in our market. There aren't any other large vacancies around there, so it'll be interesting to see if one large user or if it's several smaller users that go into the former Journal Sentinel facility. We'll go back to the I-94 corridor a little bit further north into Milwaukee County. Franklin and Oak Creek continue to be strongholds for the industrial market. Franklin added some critical infrastructure last year with the Elm Road interchange. This allows some great freeway access for the Franklin Business Park, and it spurred a ton of new development. The first big announcement there was Saputo Cheese. They're putting up a 310,000 square foot packaging facility. That's an $85 million project. And then there are also 3 spec buildings that are being built right down the street from that. All right, I'm sure you've heard plenty about the I-94 corridor, so now let's move over to I-41 and talk about what's going on there. Germantown has just been booming. Since 2019, there have been 2.5 million square feet of new construction delivered in the Germantown corporate park. And moving south down I-41, there was a new project announced in Milwaukee at the end of last year by Transwestern. They're putting up 2 spec buildings, total of 420,000 square feet, and that will be a great release valve for the businesses located in the northwest side of Milwaukee Business Park, as well as Menominee Falls, areas that have not seen large vacancies in our market over the last couple of years. So we've talked about a ton of great news for industrial. Despite that, there's a number of macroeconomic concerns, like Mike Brennan touched on, where industrial's hot streak is going to cool off. The first piece of news, the canary in the coal mine, was Amazon last year, when if you look at the map on your screen, they closed 20 warehouses, they canceled or delayed 50 more, and that was a huge surprise to me. And immediately, I did my own market research. I looked out onto the front porch of my house, I saw a big stack of boxes, and I confirmed that yes, my wife is still ordering from Amazon. So that was a surprise, but certainly they realized at some point during the pandemic, they had oversupplied themselves with space. They were starting to see the numbers cool down, and it was time for Amazon to contract a little bit. Prologis is the largest industrial real estate owner in the world, and they are projecting a 60% decline in new development starts this year, and they think that the blistering pace of leasing will start to normalize. Now, we've talked a lot about the big box space. Those are the 100 sole purpose of warehousing consumer goods, but there's another aspect to our market, of course. That's the heartbeat of Wisconsin. It's manufacturing, and they're facing a lot of headwinds right now in manufacturing. Let's talk about some of those. Starts with interest rates. I won't touch on that too much. We all know how interest rates are affecting commercial real estate transactions and small business, or any business. The next one is inflation. There is a survey done last year by the Wisconsin Center for Manufacturing and Productivity of 400 manufacturers, and they pointed to cost of materials as being the #1 concern for their business. Supply chain. You may know that there are supply chain issues, of course. You may not know that Wisconsin reported the highest incidence of supply chain challenges than any other state in the country. So that was in a U.S. Census Bureau survey completed last year. Labor, apparently nobody wants to work anymore. We've all heard that one, and 84% of the manufacturers in that survey said that it's difficult to find qualified workers right now. And it doesn't seem like there's any end in sight to the labor challenges. According to a study done by Ford Analytics, Wisconsin is projected to lose 130,000 in working age population in the 2020s. And the last item, I don't have much time to cover it, but energy costs. We're all in for some sticker shock on our utility bills this year, and of course that goes even more so for manufacturers that are using a ton of power and gas. Now let's go right into the forecast. Number has to go up. I talked about all the new deliveries we had in 2022, so much more in the pipeline. New construction is outpacing absorption in our market. It'll take time for those new deliveries to stabilize due to some of those noted economic conditions. Talked about the challenges manufacturers are facing, and that they're going to have to start giving up space. There's going to be businesses that either can't keep operating or they can't keep as much space as they had before. So that would lead to more available space. Not necessarily a large uptick in vacancy though, and that's because there is still a very strong demand from users. So those users should come in and fill up that vacant space or that available space, but again, it should go pretty quickly. I don't see how our market can support any other large spec projects, at least for the time being. There's so much in the pipeline right now, I don't think that lenders are going to get excited about spec, and so developers will take a wait and see and build to suit approach. And lastly, all the challenges that I talked about that manufacturers are facing here, they're magnified in Illinois. A lot of challenges in that business climate high crime, high taxes, high cost of labor, and they're going to find a nice soft place to land here in Wisconsin. So I think we're going to see some migration from our neighbors to the south in 2023. So that's your industrial market forecast, and now I'd like to introduce Matt Friedman from Potters International to tell us about office.